You already know what you're supposed to do. You've read the books. You've studied the setups. You've back-tested the strategy. You know exactly where your stop should be. You know exactly when to exit. And yet, when the moment comes, you don't do it. If that's you, this video is going to explain exactly why. And it's not what most people think. Most traders approach this problem as a knowledge problem. They think, if I just learn more, study more, practice more, eventually I'll execute correctly. But here's what nobody tells you early enough. Execution failure is not a knowledge problem. It's a structural problem. And the structure I'm talking about is something I call the escape route bias. Here's what the escape route bias is. Every time you enter a trade, before the market even moves, your brain has already identified an exit that isn't in your plan. Not your stop loss, not your target, something else. Maybe it's, I'll just close half if it goes against me a little. Maybe it's, I'll move my stop to break even early just to be safe. Maybe it's, I'll exit before the news even though my plan says hold. These aren't adjustments. These are escape routes. And your nervous system builds them automatically before the trade even starts because uncertainty is painful and the brain wants a way out. The problem is, the market can feel those escape routes. Not literally, but functionally. When you leave yourself an exit, you use it. Every time. Even when you tell yourself you won't. Let me give you a real example of how this plays out. A trader, let's call the pattern what it is, enters a position with a clear plan. Stop at a specific level. Target defined. Risk calculated. Everything correct on paper. The trade moves against them slightly. Not to the stop, just against them. Uncomfortable. And immediately, the escape route activates. The internal dialogue starts. Maybe the setup isn't as clean as I thought. Maybe I should tighten the stop. Maybe I should just take the small loss now and re-enter later. None of that was in the plan. All of it came from the escape route that was already built before the trade started. And here's the part that makes this pattern so destructive. The trader closes the trade early, takes the small loss, and then the trade goes exactly where the original plan said it would go. That's not bad luck. That's the escape route bias executing perfectly. Now here's where most trading psychology content stops. They identify the pattern, they tell you to be more disciplined, they tell you to trust your system, and then they leave you with nothing actionable. That's not what we're doing here. The reason discipline advice doesn't work is because it asks you to fight your nervous system in real time, under pressure, with money on the line. That's an unwinnable battle. Your nervous system is faster than your conscious mind. By the time you're thinking about being disciplined, the escape route is already half open. The only approach that actually works is removing the escape route before the trade starts. Not managing it during, removing it before. This is what no backup edge means. It doesn't mean reckless trading. It doesn't mean ignoring risk. It means building a structure around your trade where the escape route simply doesn't exist as an option your brain can access under pressure. Experienced traders who've worked through this tend to do a few things differently before entering a position. First, they write the full trade plan before entry. Not in their head, written. Stop level, target level, the one condition that would make this setup invalid: everything on paper before the position opens. Second, they define what they will not do. Not just what they will do. Specifically, I will not move this stop unless this specific condition changes. I will not exit before my target unless price reaches my invalidation level. Written before entry. Third, and this is the one most traders skip, they accept the full risk amount before the trade starts. Not intellectually, emotionally. They sit with the number. They ask themselves, if this amount disappears right now, can I continue trading? If the answer is no, the position size is wrong, not the plan. When all three of those steps are done, the escape route gets significantly harder to access under pressure. Not impossible, but harder. And harder is enough. I want to be clear about something. This is not about being rigid. Markets change. Sometimes exits need to change. Experienced traders understand the difference between a plan adjustment based on new information and an escape route activation based on discomfort. The difference is simple. A legitimate plan adjustment happens because price did something specific that changes the thesis. An escape route activates because you feel uncomfortable. That's it. That's the entire distinction. If you can learn to ask that one question in the moment, is this adjustment based on new price information, or is it based on how I feel right now, you've already closed most of the escape routes your brain builds automatically. Here's what this looks like in practice for traders who've worked through the escape route bias. They stop having the internal debate during trades, not because they've become emotionless, but because the decision was already made before entry, and there's nothing left to debate. The plan is the plan. The stop is the stop. The only question is whether the thesis is still intact. Their results don't improve because they found a better strategy. They improve because they stopped sabotaging a strategy that was already working. That's a different kind of edge. Not a market edge, a structural edge, built before the trade starts. One more thing before we close. The escape route bias doesn't disappear. Even experienced traders feel it. The difference is they've built enough structure around their trades that the escape route doesn't have a door to open anymore. That's the goal, not to stop feeling the pull, to build a structure where the pull doesn't have anywhere to go. If you've been trading with a solid strategy and still finding yourself exiting early, moving stops, second-guessing entries, it's not your strategy. It's the escape routes you're leaving yourself. And now you know what to call it. This video is for educational purposes only. Nothing here is financial advice. Trading involves substantial risk and is not suitable for everyone. If this resonated with you, the question I want you to sit with is this: what escape route are you still leaving yourself in your trading? You already know what it is. Drop it in the comments. And if you want to go deeper on the psychology of disciplined execution, subscribe, because this is just the beginning.